Good morning, everyone. Thank you so much for joining us. I'm Tammy Costrini from Insurance Advisors Direct, and I am the Senior Brokerage Sales Advisor for Individual and Worksite. And we also have Jason Panitch here today, and he is Brokerage Sales Advisor for our ancillary. He also will be assisting on the under 65 side of IAD with me. And welcome to Jason. He has been with us for a couple of months. So if anyone has not met him, you will have the opportunity today, and I am sure you'll be talking with him shortly. So a little bit of housekeeping for today. Everybody comes in as on mute and also no video. So if you have questions, please utilize the question and answer section, and we will monitor them throughout. And then we will also pause at certain times to see if there's any questions. All right, everyone. So as you know, ACA has many changes that are coming this year or for 2026. And we wanted to just talk a little bit today about some of those market disruptions that we are potentially going to be seeing or definitely seeing, as well as how we can actually navigate those disruptions and create an opportunity not only for yourself, but also for your clients who may be looking for alternatives to where they've been on the ACA plans. So in this, with the market disruption, we know that the enhanced premium tax credits are set to expire at the end of 2025. We also know that during the government shutdown, there's a lot of conversation going around about these subsidies, what it would mean, and wanting to have them either changed and expanded in some way to extend the timeout or to keep them as is entirely. So there's lots of conversation going around about that. And in addition, we also have our annual rate increases. That's something that we see every year, and doesn't matter which side of the healthcare arena you are on, that is going to happen. But unfortunately, things that are a sure thing that is going to happen is we've had shifts in special enrollment periods. The 150% FPL expired in August, so that is shrinking the ability for people to get the enhanced subsidies or to even get a special enrollment period. And we are looking at, a base rate increase of average, and this is across, definitely in Michigan, but also across the country, potentially 25%. And that's before the subsidies changes. So we are really looking at a huge disruption in the marketplace this year. So I'm not going to read all these slides to everybody, but you'll have these to look at. And, we also are going to be talking about some carriers that are leaving markets. So there is going to be that market disruption as well. Some people are very attached to a provider or a specific hospital. So you may be having to look at alternatives in that regard too. And also the immigration eligibility changes. The fully present immigrants under 150% or 100% of FPL will lose their ACA eligibility entirely. So that is another market that is going to be looking for how they can still have some health coverage. Now, we do know that there's a number of carriers who are either leaving the market this year or they are changing, they're reducing the market share. CVS Health, which is also known as Aetna, throughout the country, they are completely withdrawing from ACA for 2026. So if you're listening from another state and you have members that are on Aetna plans, just know that you will need to move them to another carrier for 2026. Here in Michigan, 𝗵𝗵𝗏, which is one of the largest ACA carriers, is indeed leaving the Metro Detroit market. And that pretty much means they're going to be leaving Michigan entirely. So those are also members who will need to be moved. And they are in the same as with HAP CareSource. They also, unfortunately, will be exiting the Michigan market in January of 2026. If you offer CareSource in other states, please check with those states to make sure what the market will look like for CareSource next year. They may have some additional changes, but they still will be offering product. Humana is reducing their ACA marketplace footprint across the states that they are in. We don't utilize them in Michigan. They don't even show up as an option, but there are other states where Humana is being sold. And also United Healthcare. They're going to be scale back the presence in the ACA individual market significantly across the country, but it will not pertain to Michigan. In fact, they are probably going to have a little bit of expansion here in Michigan. And lastly, Molino Marketplace. That will be also exiting the Michigan market as well as other markets for 2026. So all of your clients will start getting letters. Some have already arrived, just like an ANOC for Medicare, letting them know what their plan is going to be for next year. The ones that have plans that are leaving, they're being notified that already. And those that have service disruptions with networks or other market shares, that will also be there. They will be putting some type of rate on a letter. We know historically those letters are never correct, but with all of the conversation going on this year, there's a little more uncertainty from the client's aspect about the letter. So I cannot stress enough the importance to get in front of your clients now. Let them know that there's still a lot of fluctuation going on. We probably will not have rates up until at least the 25th of October, more than likely November 1st. So the rates that they are seeing there, please let them know that you will meet with them, set up a time to meet with them in November, as you usually do, to talk about any carrier changes as well as the rates. And it will be an opportune time to talk to them about additional products if they are seeing where their plan is going to be outside their budget. So this slide is just talking about what the increases could be. I know everyone has probably been seeing this on the news where the Kaiser Family Foundation is project that it could more than double up to 114% increase. That's between the loss of subsidies and the rate increases that are within the market. So there are some pretty scary numbers out there that people are seeing. So we just want to help them not have panic about what they may be encountering. Here is a slide that kind of goes over it. On average, they're saying a 55-year-old couple making $85,000 a year. They currently receive the $13,000 in tax credits, but more startling is they would be going from paying $7,225 in premiums per year up to $24,000. So as you can see, having it tripled is a huge cause of concern for everybody, and this is what they are seeing. So it's up to us to reach out to them, let them know that we will guide them through and get them the coverage that they need and that they can afford for 2026. And it's also important to let them know to reach out to their legislators and have these conversations so that they can see what these real world impacts will be. So again, what you can do now is staying ahead of the curve. You want to compare ACA potentially with some alternative options, which we will be talking about here in just a moment. And, just being sure that you are participating in any carrier webinars or rollouts that you see coming up. Definitely keep track of your emails. Carriers will be communicating via email with everybody, including us. We will try to get you the information as we have it as well, but it'll be really, really important this year that you monitor any webinars, meetings, emails that come through. Again, what you can do for yourself to navigate the change and assist your consumers as we are coming into 2026 is offering the ACA alternatives. I know we've talked about them a number of times in the past 6 months or so. We've all worked really hard to find products that we think will be the right fit for you and for the consumers in the wider marketplace as we see what's going on. Short-term medical is back in play in Michigan. It's 6 months limit Other states go up to a year or up to 3 years. So definitely keep track of what's going on in your state. Reach out to us if you have any questions. Also expanding into ICHRA. While we're seeing all this on the individual side, group is seeing something in increases as well. They're getting double-digit increases. Employers are feeling the pinch. So ICHRA, there's a lot of talk going on about ICHRA. Those are individual coverage health reimbursement arrangements. And it's a great way for employers who are feeling the pinch of increasing health premiums to take people off of a traditional employer group plan and placing them into an off-marketplace exchange. It can save the employer a lot of money, and it more importantly offers a consumer choice. Instead of having 3 or 4 plan options, they could have 80 plan options or however many marketplace plans are in your area. Here at ID, we've been seeing the trend of this, and we are getting ready to launch later this month our ICHRA platform, and that will be one where the agent maintains their control. You're going to control agent of record for yourself. You're not going to give it out to one of the other companies that are out there. You will be guiding your employers through it. You will have ownership of that. You'll have the process beginning to end. So we're excited about that. And we'll be announcing a webinar later this month to go over it. And Jason is here today too. He's going to talk a little bit about supplemental product fill gaps. No matter what the conversation, if you're selling ACA, if you're selling individual plans, if you're selling group, or if you're selling Medicare, supplemental products are going to fill the gaps that people are going to be feeling a bigger pinch on this year. Higher deductibles, in the ACA, it's $10,600 per individual, and then double that for families. Sorry, I cannot do the math today. But there's hospital indemnity plans, accident, critical illness, cancer, dental. We all know what plans there are there. They can have a plethora of products, or they can just take 1 or 2. If they're younger, maybe they really want more of an accident plan. They do a lot of sports, they're skiing, whatever the case may be. An ER visit can take thousands of dollars towards that deductible that they're going to be responsible for. Many people don't have that. So we're here to help them fill those gaps. And again, this is all, whether it be a supplemental or it be an ACA alternative, year-round sales potential. That goes with ICHRA too. You're allowed to sell outside of open enrollment and continue to have the income stream and to help the consumer who may decide during open enrollment, oh, I don't need that ancillary plan. A few months later, they're like, oh, I need it. That's okay. We can help them fill that gap then. And again, the more you diversify, it protects your book of business. And the more that you can offer to them, the stickier they will be with you, and they will refer more to you. And that's how you continue to grow your business. So a couple of the exclusive partnerships that we have that you may have heard about is USA Health Plans. We've been offering them since the spring with our partnership. And we have a brand new exclusive partnership with Balance Care. Balance Care is through our partner Insurance Care Direct, also known as ICD. This plan is written with Zurich. So another, well-known insurance brand is the backbone to this Balance Care product. So a little bit about it. I'm not going to go too far into detail. We'll definitely be having more marketing materials coming out on it. It's a guarantee issue product. It's based on a membership, like an association plan. They have 5 membership level plan levels. That allows a wide range of options to them. They have tiers starting under $200 a month, and then they have family member or family options that go higher. This plan is not ACA compliant. However, you could bridge it with a MEC plan or another plan that together they could give them a pretty cohesive offering. And this is ages 18 to 64. One thing I will say, about the balanced care, which not a lot of the other limited medical or alternatives can offer. No Social Security number is required. So again, we look back and see those immigrants who are, people with immigration status that are losing coverage. This could be an option for them. It's a fixed indemnity insurance. They have accident coverage. They work off multi-plan network. They have non-insurance benefits through the association. It goes over things like holistic care, a counseling hotline that you can talk to at any time, savings plans for many, many different products, and there's no waiting period. Immediate coverage with the normal pre-existing condition limitations for the first 6 months, not the first 12. So again, it's going to be ideal for your individuals without ACA subsidies, gig workers, early retirees, and small employers. They can offer this as well. Next, we have our USA Health Plans. As most of you should know, it has a wide range of plan offerings, anywhere from major medical insurance all the way to a dental plan. There's just lots of options that are available. It really helps you individualize to your consumer. They have one payment, one portal, no matter how many products they choose. The flagship is their underwritten PPO plan. It has unlimited benefits. There's no annual or lifetime maximums, so it's ideal for comprehensive coverage that you're looking for. It does have minimal essential coverage. All the preventative is covered. It looks a lot like an ACA plan. It has a max out-of-pocket annual. There's prescription drug coverage, mental health, chiropractic, and as you can see, deductible options between $1,000 and $7,350, including HSA options. So again, they have a group plan that is exactly like the individual plan. It's just written on a group chassis. So this gives more options to you in that regard. If somebody's looking for that same ACA benefit, they're pretty healthy. This is definitely their most popular product. And again, they have MEC plans. This is something that is ACA compliant for the preventive care. For somebody who's younger, who is not making a lot of money as an hourly worker, this could be a great plan. There's no deductible. There's no waiting periods. It's guarantee issue. It has RX. It has telemedicine, lab benefits. And as you can see, it starts at $99 a month up to, then it includes family coverage too, which is very reasonable as well. So this is great for people who are healthier, maybe people in the service industry, younger people. It still lets them go get those preventive services, and it's not breaking the bank that they may be experiencing with ACA. And just added is a Gap Advantage plan. This is going to work kind of like a supplemental indemnity. The benefits are listed here. The rates on that start at $99 a month as well. So it really does fill in some gaps if you're in a MEC coverage or you have a high deductible plan. And another one that they just added is Sparkle Care Dental. We're really excited about this one. It does use the Cigna Dental PPO Plus network, but $4,500 annual max, preventives at $100, and I know we're always being asked about the missing tooth clause. This has no missing tooth clause, and it will cover implants. So it will be, the major is covered at 15% for year one. Sorry, it was in here and I don't know where it went. But major does cover 15% day one, and then it goes up each year after that. And I think it maxes out at 60%. So that is something that not a lot of our other dental plans will offer together. So that's important. You can see the rates go from $69 a month for an individual to $199 a month for a family. And it also, for out-of-network dentists, they get paid instantly on the first day of service. So if somebody's doctor or dentist is out of network, as long as they will bill, they will get paid that same day. Their goal is to get more dentists in the network. So if they see how easy it is to work with the plan, they're going to want to become a network dentist. So that is one of the goals for them. And then we have our other products we've had for a while, LifeX, Network Pros, as well as Population Science Management through Iron Health. Both of these plans have some conditions to them. They either need to have an LLC or have some type of 1099 income. And they also ask that they perform health surveys or health assessments that they will do every month. By doing that, they become an employee. So there's a little work, probably about an hour a month. They do pay them for it on the LifeX side, and they become a W-2 employee, which allows them to have group coverage. They're called research associates. These plans can be a little tricky as far as the understanding that even though they use some national networks, the well-known national networks, they're not a plan for those networks. So we will work with you when you contract with them just to understand, so that you understand how to present this to your clients. All right. And with that, I will hand it over to Jason for a few.
Thank you, Tammy. As we had mentioned previously, now more important than ever it is to offer ancillary products to your clients. So at IAD, we partner, with the best ancillary carriers. We have hospital indemnity, as mentioned, critical illness, accident, dental, vision, as well as hearing plans to cover unexpected out-of-pocket expenses. We talk about, again, increasing deductibles, co-pays, co-insurance. An unexpected accident or illness very quickly could put your client under financially, very, very quick. So even insured clients face financial strain from medical costs. 1 in 3 Americans struggle to pay medical bills, even with insurance. Oh, this is rolling pretty quick.
Oh, sorry. I didn't mean to hit it. Let me go back.
No problem. 1 in 3 Americans struggle to pay their medical bills, even with insurance. So with an average ACA deductible, which is 5,000 plus, and an individual 10,000, or a family 10,000 plus, those expenses can be substantial. 56 of Americans could not cover a $1,000 emergency expense. How many of your clients could handle that out of pocket with an unexpected illness or accident? Accident and illness happens more than often than clients think, and again, it's going to come unexpected. 1 in 7 Americans need medical care for an injury each year. 1 in 7. A hospital stay averages $2,800 per single day. Every 40 seconds, someone in the United States has a heart attack or stroke. That frequently. So ancillary products fill the gaps in major medical coverage and provide that financial security. Major medical doesn't pay for deductibles, co-insurance, or lost income. Ancillary coverage helps our clients manage those hidden unexpected costs. These plans are affordable, they're flexible, they're easy to qualify for. Within some age groups, they're guaranteed issue. Most others, simplified issue. Can be issued on an individual as well as a spouse basis, or individual and family basis as well. And plans to cover individuals starting at a young age of 18, all the way beyond age 65 into the senior age group as well. So fitting primarily the ancillary products specific to your client's age and demographic is important. As mentioned, previously, a younger client, you'd probably want to have enrolled in an accident plan. A client to the mid-age, you're probably looking more so at, hospital indemnity or critical illness plan. You're not just selling insurance. Again, you're building financial stability.
Thank you. So one product that we're going to highlight just briefly today is the Allstate Hospital Expense Protection Plus. This is kind of geared more towards the under 65 market. And you'll see here the Plan C is kind of their most popular plan. They go in the hospital, they get a $5,000 benefit for that day, one per year. They have sickness confinement. There's outpatient. If you go into their higher level plans, you can get some outpatient coverage, emergency, labs. So it really does help fill in some of those gaps that you see in the high dollars for ACA plans or even ACA alternative plans. There's something very unique with the under 65 market through Allstate and 𝗁𝗇𝗃. Most of us will all enroll our ACA clients through 𝗁𝗇𝗃. So they made a partnership. It may be a little difficult to see here, but when you sign in to the Allstate agent back office and do quoting, you'll see Health on Exchange. This is going to take you and show you the 𝗁𝗇𝗃 plans. So you can start to shop them, enroll them. It's everything that you see. And once you add, it will take you over to 𝗁𝗇𝗃. That experience, you will complete the application, the enrollment, just as you always do. And then when you're done, it'll say go back. It's going to take you back here to the Allstate website where you can see all the different plans you can add in, and it fills in a shopping cart. You'll see what their payment is going to be. That will be an easy way for you to cross-sell and protect your clients with these additional benefits. You can see they have fixed indemnity benefits, they have short-term care, they have term life, cancer. They've got a ton of different products that you can move around. You may be working with somebody and they decide that they don't want to be on the exchange. Well, then they've got some health products that you can switch over to. So it's a really nice experience. You can email them a proposal. You can apply right here. So we really do think that this is a great partnership that they've developed. And so that's why we wanted to highlight them. And also, we just last week recorded a webinar with them that went over their products. They're really great to work with. They can help you with this 𝗁𝗇𝗃 link. I wanted to put up a QR code here and pause for a moment so that you could get straight to that webinar that we did with them. We did a pre-recorded. And also there is a YouTube link as well. So again, I highly suggest, it was about 36 minutes altogether, that you do listen. Carl is great. His team is great. They will work one-on-one with you, go over products. Again, I cannot, thank them enough for the partnership they made with 𝗁𝗇𝗃, but also that they've had with the IAD. They're a great company, and they have senior options too. So it's not just on the under 65 side. This is just what we were kind of highlighting today. But they have, and senior goes down to age 55. So again, I think they go all the way down to 2 months for children for their health products. That could be hospital indemnity, it could be accident, it could be some limited medical. So it's short term. So again, I highly suggest you take a look at this webinar. It will also be on our YouTube page. And I will hand it back over to you.
Thank you again, Tammy. A small add-on can prevent a financial disaster. For example, a client that has an ACA plan with a $6,500 individual deductible, $13,000 deductible for family. The solution is to add a low-cost ancillary policy to close the gap. So, for example, hospital indemnity, we have a plan that has a $6,500 day one benefit, to cover that deductible, plus a $1,000 outpatient surgery rider. The surgery, in addition, time not spent in the hospital, an additional benefit. And you can see that the premiums are actually, pretty affordable. A 36-year-old, for example, is just over $40 a month. Or again, the policy can be issued as a family plan to include the children as well, a little bit higher, just over $132 a month. In addition, an accident plan, especially within pretty much, an individual at any age, but 24-hour coverage, as low as $1,650 a month individually, or just over $31 on a family plan. There's different levels of benefits that, we can assign under the different, plans that we have available to cover the out-of-pocket expenses associated with accident, different levels of benefits we have at different rate classes. Also, independently, we have a cancer, heart attack, and stroke policy. Or the individual or family, you could issue just a standalone cancer or standalone heart attack and stroke policy. Again, we ask ourselves, and most of us, whether it's a family member or a friend, we can associate to somebody that's been impacted by this dreadful disease, cancer, heart attack, and stroke. Again, unexpectedly. And with treatment associated, thousands of dollars of out-of-pocket expense could be incurred if we are not protected financially with an ancillary plan. So again, there's different levels of benefit. Up to $75,000 we have on a plan to cover those out-of-pocket expenses. Here, for an example, we have a $20,000 benefit to give you an idea of what the rate would look like. Just over $31 on an individual plan, and a family plan just over $56. So again, very affordable rates, simplified underwriting, as I mentioned previously. To reiterate, within some age groups, it's guaranteed issue. So these are a strong sell versus a $6,500 deductible hit. Would your client be able to out of pocket thousands of dollars if they were not provided with, with a cancer, heart attack, or stroke plan, or hospital indemnity and accident plan? As you know, the cost for treatment can be into the thousands of dollars.
Right. And it's not just the cost of the treatment itself, but it's also time off work, whether it's you or a spouse. These benefits really do help cover a lot of things, because you can't look at a $6,500 deductible and then look at how you're going to pay your mortgage, how are you going to put food on the table. So these benefits, whether it's individuals or seniors, can make a world of difference. And I think we all know how much a cup of coffee costs nowadays, so I know we've always used that in insurance. Like if you take, you spend $3 a day on coffee, but nowadays it's like $6. So there really is not any reason for people to not grab some type of additional coverage to cover the expenses and to cover your everyday living costs too. I think that's really important.
Very good point, Tammy. Also, transportation costs, ambulance costs can be very expensive, as well, or observation within a hospital. So separate from, surgeries. A lot of the plans cover, a day or two of what's considered, observation hospitalization as well.
Very good point.
Ancillary sales grow your book and your bottom line. You're not adding complexity. You're delivering complete care, which is very important. It boosts the client satisfaction and loyalty. It increases cross-sell revenue. Clients with multiple policies stay longer and refer more clients to you. So I recommend packaging it. Work with IAD, work with myself as your advisor. Any questions you have on the product, quoting, enrollment, so you're prepared to be able to speak to your client and just offer it as a package for an additional, $40 on an individual plan, or maybe higher depending on the plan, to a family plan. Package it on the initial sale. Most importantly, ask for the business. How to add ancillary to every sale. Ask about out-of-pocket exposure early. So Mr. Client, Mrs. Client, God forbid you're diagnosed with a serious illness, or you or somebody in your family has an injury that could amount to thousands of dollars of expense. Would you be able to out-of-pocket that? Well, we can take care of that for just X amount a month. Simplified underwriting, we can get you, enrolled today. You don't have to then go back to your client. That's what you call packaging, where it's being sold and presented on the initial sale. And share real life client stories. Again, as I mentioned, to reiterate, one time or another, most of us, we unfortunately know a family member or friend that's been impacted by a significant injury or accident. So share those real life stories with your clients as well. I cannot recommend that enough. Present bundles as part of every quote, and use our Bridge 360 to quote health and ancillary in one workflow. So integrated carriers with the health and ancillary products into a CRM platform where you can easily quote and enroll your clients from one system. So ancillary plans aren't extras, they're essentials that protect your client and really help to build your business. Start adding them to every health quote. Start asking for the business.
Absolutely. Thank you for that. So we will have a slide up here with our contact information. Most of you already know how to reach us, but again, for the individual, ACA, alternatives, worksite, anything under 65 or group, please, reach out to me. Ancillary products, reach out to Jason. We interchange. You can reach out to either one of us. So we want to be here to support you through what we know is going to be stressful for everybody season. It already is. I know, if you're doing Medicare, you're already in it. You're stressed. And if you're looking at the ACA, you're starting to get stressed. So let us help take some of that stress off of you. Again, utilizing 𝗵360 is going to be great with the CRM. They're building every day on the Medicare side within Connecture. We're building in ancillary carriers there so that you can do the quoting. That's ever evolving as well. So we definitely, appreciate everything that you do. We want to be able to help you help your clients. And so let me see. I am trying to get my bar back here to see if we have any questions. That was the last of our presentation. If you have any questions, please feel free to enter it into the chat and we will be happy to answer some. We'll wait on a couple more minutes to see if anybody has anything. I know everybody is super busy. So again, we really, really appreciate you taking the time to join us today. We'll have this up on our YouTube. You can contact us directly. If you want to get contracted for Allstate, let me know. If you want to get the webinar, if you need us to put that slide back up, I'd be happy to. And also, I just want to mention that when we did the quote on the $6,500 deductible, that was the Manhattan Life product, which is they have senior and under 65 hospital indemnity plans, but their under 65 is unique because you can do it up to $10,000. I'm not sure if they'll increase it. They may need to, but they'll have coverage based on either deductible or max out of pocket. It's a slider. You choose what they want. If they have something less, then, it would be less. So, and it also can be great if you're talking to a friend who's got group coverage and they're like, oh gosh, what happened? I just got a $5,000 deductible. It used to be $3,500. What am I going to do? Talk to them about adding on a plan. It can be utilized within the group space as well. So again, these products can help everybody no matter what their insurance situation is, or if they're going uninsured. They wrap with the MEC plans. So again, there's just that, and our AC alternatives will really help you this year. Well, again, thank you so very, very much. Our contact screen is up here, and I'm going to flip over for a second to our Allstate webinar recording. If you want to do the QR code and take a photo, that'll lead you right to that recording. Or also there's a YouTube link if you prefer that.
Thank you for joining the webinar. We look forward to working with you.
Yes, thank you again. Happy AEP and OEP. We appreciate you so much. Have a great one.